What's up, everybody? Welcome back to Creator Crypto. I'm your host, Matt. Thanks for joining me today. So I want to do a video talking about inflation and Bitcoin as a hedge against it, right? So I saw the headlines last week like everyone else, and it's coming in hot, right? 6.2%, a 30-year high. So I want to talk a little bit about inflation, where it comes from, where maybe it's going, but then really what role Bitcoin may have to play in your portfolio as a hedge against the erosion of your purchasing power. But before we get into it, remember, if you like the video, give me a like, hit subscribe, and let me know what you think in the comment section. Okay, so persistent inflation, generally speaking, is going to occur in environments where the growth of the money supply is outpacing the productive capacity of the economy, right? So you got a bunch of currency chasing fewer goods and services. Prices come up, we all feel it, and our purchasing power goes down, right? Which is what we're trying to protect ourselves against. So if it happens in environments where the money supply is outpacing, basically the ability of the economy to produce goods and services, then we want to be mindful of the money supply and its growth, obviously. So when we look at where the money supply was, as the pandemic was taking note, and this is Federal Reserve data, we were at about $15.4 trillion of currency out there in circulation. When you look at that, where it was then, and you look at the growth to today, we're at about $21 trillion. That's a 36% increase in our money supply. So those of us who see this go, hey, this could spike some inflation, and we got legitimate concerns. That's where it's coming from, right? And so we're starting to see that. People are starting to actually see that in CPI. So you'll see over here up and to the right, 6.2% October 2021. So I'm not here to argue whether that's the right number or not, or whether we should be concerned or prescribe a monetary or fiscal policy as a response. I'm just here as an investor, as a market participant, going, hey, this is impacting me, and I want to protect myself against it. But CPI isn't the only place we're seeing prices go up. Look, if you look at the other market indexes, this chart is showing you the Dow, S&P, and NASDAQ. And this goes all the way back to, look, right after the recession, the Great Recession, when they started quantitative easing. This asset price inflation, which often goes undiscussed, that's a parabolic increase in prices, and no one talks about it. Makes sense because, those of us who are fortunate enough to own assets, it's been good for us. But it's also the source of that frustration when people describe inequality. I think that's what they're really describing. They're going, the wealthy are getting wealthier. And it's true because they have their wealth in assets. They're not living paycheck to paycheck. They've put their money in assets that are appreciating in price. So they are getting wealthier in that sense. So just something to keep in mind. Assets prices have been going up for a long time. CPI is the thing that's getting the attention now, but it's not the only place that inflation is manifesting itself. Okay, so we've established that the money supply is going up, right? We've increased the amount of money in circulation, and that we're now seeing that both in consumer prices as well as in asset prices. What do people typically do when they start observing this and become more and more concerned about it? Well, traditionally, they've looked at things like gold or real estate or other scarce goods, right? If the problem is due to an abundance of currency that's causing its purchasing power to go down, then I want to move that value into assets that are scarce and for which there's demand. Now, that's traditionally been gold. For centuries, that's been gold. People appreciate it. They use it to make things. They value it. There's kind of a consensus that gold has value, and people have turned to it as an inflation hedge. But the interesting thing is when you look at a chart over the past year, in an environment where you would expect gold to be doing really well, it hasn't really been the case, right? When you look at this chart, there's almost a downward trend over the last 12 months, but more or less flat. And this is the price per ounce we're looking at. But if I hide this chart and I show the Bitcoin chart, the pattern is clearly up and to the right? We went from a $200 billion market cap to $1.2, $1.3 trillion market cap. So obviously that's been outpacing inflation by a huge margin. Another way to look at this, the erosion of the purchasing power of a dollar versus the price appreciation of Bitcoin and how drastic it's been, is on this chart, which I stumbled across recently. This shows a dollar in August of 2010. So those are the gold bars, the value of a dollar over time, and you can see the effects of inflation. Now, this only goes through August of 2020. If you extend this out to this year, August of 21, or October of 21 rather, last year was about 84 cents. We're closer to 79 cents. So that dollar in 2010 is more like 80 cents now, right? That's a huge loss, 20%. I lost 20% of my purchasing power over the last 10 years if I was just holding dollars. On the flip side, if I had bought Bitcoin in 2010, which I looked it up, in July of 2010, one Bitcoin was at about 8 cents, right? So a dollar would buy you 12 and a half Bitcoin. Now, since this chart only goes through August of last year, it doesn't reflect what it would be worth now, but 12 and a half Bitcoin times 65,000, which is where it is as of right now, you're talking $800,000, right? Now, I know that was a little bit of an anomaly. It's kind of a one-time thing. And you're thinking, well, if I get in now, I'm not going to see that type of appreciation. You're probably right. But the point is, as an asset class, it's more than outpacing inflation. It's really starting to stick in people's minds, in terms of an asset class, a legitimate asset class. The government's looking to regulate it. There's ETFs allowing people to get exposure to it. Hedge funds, big investment banks, they're looking to get exposure to it. It's legitimate now, right? So it's legitimate to look at it as an inflation hedge, maybe alongside gold, maybe as a replacement for gold. And in addition, I would throw real estate in there, other scarce goods. But Bitcoin is totally legitimate as an inflation hedge. Its performance speaks for itself. And beyond an inflation hedge, it offers the opportunity to appreciate as an investment, right? So if you're looking to it not only as a scarce token with programmatic scarcity, there's only ever going to be 21 million Bitcoin. But beyond that, it's a technology you can build on top of. So right now, Twitter has integrated with the Lightning Network, which is built on top of Bitcoin, allows people to tip content creators on Twitter using the Bitcoin network. Super cool idea, and just one of many things that's happening in the space. So more than just being a scarce asset that people desire, they desire it because of the potential of the technology to revolutionize things. And that's why the discussion around it can be a fever pitch, or feel that way anyway. So I encourage you to continue to learn about Bitcoin, learn about what it is, why people are so bullish on it, why it's managed to stand the test of time, and what makes it different. So that's it, everybody. I hope you liked the video. I hope maybe it helped inform your thinking for an approach about how to guard against the effects of inflation. And we'll see what happens over the coming months. Hopefully it gets under control because inflation can hurt the most vulnerable among us, and nobody wants to see that. But you got to prepare for the worst. Until next time, everybody, have a great one.